Hello everyone, welcome to the Ichimoku.co daily stock market review for the trading day ending Monday, April 18th. Moving firstly to the S&P 500, and very solid buying coming into the market today. A very large white body candle suggests that the buyers have returned in a very strong manner as opposed to the previous 2 days trading of very small bodied candles. The day prior to the previous day, 2 days ago, was a doji candle, set the market up for a change of trend, and we saw that confirmed with the next day, but finding support within the top of that highlighted yellow zone, as we've done for the past 3 consecutive days. The buyers bouncing off there in a very solid manner, closing with control and finding some very strong commitment to taking this market higher. We have seen the market trade to that 2093 level of resistance and close just around that region. So this is a very good test for the buyers for the next day's trading. Are they going to be strong enough to trade up through there and also trade up through the round number 2100? With the solid build of momentum, as suggested by the large white candle, it certainly does seem as though they may give it a try, and there's a good opportunity here for them to close up above 2100. Just looking back here at the previous time that we closed in a bullish manner just above 2100, we saw the market fail to follow through and then sell off in a very strong way to end up testing all the way back down to about 1813. So even if we do see a bullish close above 2100, we want to see some strong bullish follow through, and that will convince that the buyers certainly certainly do have very strong control and are showing even stronger commitment than they did the last time. In terms of Ichimoku, obviously a bull market in all 3 time frames, trading above the cloud, the Kijun-sen, the Tenkan-sen, slightly overextended in depth away from the Ichimoku cloud. But over the next month or so, the Ichimoku cloud actually moves higher and will lessen the pressure on the market to retrace back towards that equilibrium, and that will start as of the next trading session. So if we don't see any strong pullback over the next day or two, the pressure to pull back will be relieved as we move forward in time. In terms of the Kijun-sen, it's pointing up very sharply and it's reflecting some solid upside momentum in the market in the medium-term time frame, as is the Tenkan-sen, not pointing up as sharply as the Kijun-sen, but still pointing up with the Tenkan-sen is suggesting strong upside momentum in the short-term time frame. The Chica span is also supporting the bullish activity that we're seeing. Now, if you do see the market come off, firstly, we will be watching to the top of that zone at roughly about 2079 to hold a support. Then all the way down through to the bottom of the zone, about 2040, we could find support coming in, and especially around the Tenkan-sen trading at 2064 or the Kijun-sen around 2044. In terms of that pattern that we were watching, and our conservative target was up around the 2113 level, that would include the market trading through the 2100 area, but we have gone a long way to reaching that target after the breakout, so seems to be performing quite well. Just going back to the trend line and the trend channel that we were watching previously, and now that the market has taken out that previous swing high, we are able to reposition with a new trend line. And here it is. Here it goes through the troughs, very close to the troughs that were made, and with the market taking that out, it's describing this trend here. Importantly, the break of the previous trend highlighted the loss of momentum of the previous trend, and now the trend resumes back up on its way. And this really does highlight how important it is to recognize that the break of a trend line is not necessarily a break of a trend. It says something about a loss of momentum of the trend, but a trend can still be intact even though a trend line is broken, as we saw here, and we still do have the market making a series of higher peaks and higher troughs, but described by this shallower trend line, suggesting that the momentum of the trend that it describes is weaker than the previous, but still intact. Next to the bands, and strong bullish activity up above the upper band suggests a strong bullish tone to this market, finding support again at the top of the bands for today's trading. So we need to watch that for the next day's trading. It's at 2075 at the moment. The bullish breakout, strong bullish follow through now suggests we certainly could see the S&P continue to trade to higher levels, supported by the Chica span. To our market breadth indicators for the S&P 500, and here we see the cumulative advanced decline line. It is very strong, well up above its 50-day average, up above the upper band, and suggesting that we certainly could see continued upside price activity. It is suggesting that the overall price appreciation in the S&P is broadly supported, and suggesting that the market is quite healthy in terms of internals. Also, the Hawlane indexes in their various timeframes is looking quite strong, up above their averages, and the longer term is above the upper band, suggesting that there is some good solid strength here, and that the internals are being supported broadly. Next to the percentage of stocks that are more than 20% below their yearly highs, and that continues to trend down. It's down below its average and moving lower, and suggesting that this market is relatively strong. The percentage of stocks within 2% of yearly highs, and we've seen a renewal of that indicator moving higher up above its moving average and supporting the bullishness that we're seeing in the S&P. Our Ichimoku breadth indicators are supporting the strong trending price action that we're seeing in all three timeframes. Percentage of stocks above the Tenkan-sen in the S&P 500 is up at 83%, looking rather extreme, but moving higher and looking strong. Percentage of stocks above the Kijun-sen is above the 50% level, above its average at 79%, and percentage of stocks above the cloud is very strong as well at 80%. The only problem here is, are we going to see a cyclical peak, and then with those indicators moving off, are we going to see the market start to retrace? But at the moment, there's no sign of that occurring. Next to the sentiment indicator is the VIX indicator, and the VIX continues to trend down very strongly, well down below its long-term moving average, down below its more medium-term average, and below the band, suggesting it is very weak and supporting the strong upside price activity that we have in the S&P. The VIX oscillator is below the minus 5% level. It's at minus 7.4, and suggesting that traders are very comfortable with the price appreciation that we're seeing. Also, the high yield bond spread is supporting a bullish market. It's trending lower, and that's the spread between junk bonds, corporate junk bonds, and government bonds in the US, and suggesting that the risk for companies in the overall US economy is weakening on a very short-term basis. So not a lot of risk is coming off